This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:07 p.m. Eastern Standard Time, April 22nd, 2019. The last stretch of a bunch of trading days left for the end of April, first month of the second quarter, right in the thick of earnings season. We are going to get a slew of massive earnings coming out this week. We started off last week with the bank earnings, and this week it's going to be a whole bunch of the tech earnings and industrials. Boeing, UTX, Whirlpool up almost $12 right now. Recommended today earlier on as an earnings trade. So you're going to be very happy first thing in the morning for people who bought the calls. We have a couple more coming out tomorrow morning too that were highlighted. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Google YouTube channel, Clueless Trading. Quick friendly reminder to follow us on the Instagram channel under Clueless Trading. Fantastic resources out there in the form of highlighted trades, options charts primarily. Very useful for traders to do a quick check at the end of the day. I take some time at the end of the evening, even when I'm tired, to put out some great options charts so you can see visually what happens to options when we recommend it and where they go. You can see it numerically when I'm putting it out there, but you can see it visually when you go to the Instagram channel. On that note, let us begin. First of all, thank you for attending. I know it's after a long weekend, it's a Monday evening, so I don't expect too much attendance, but at the same time, everyone can listen to this at their own time, hopefully prior to trading tomorrow. So let us begin. First of all, let's focus. This is your little animation. There you go. All right. Wakes everyone up. They don't need coffee. And let me start off with the broader picture. Number one, let's start off with some facts of trading. Number one, markets are super volatile. Whether it's tight range volatility, whether it's wide range volatility, markets are volatile. You wake up in the morning, futures are down 10, 11 points. Tell you guys to tactically buy it based on my levels that I show, and starting right there at around 9 o'clock, 9:30, the markets just zoom higher. Move in a very tight range, and then make a sharp move into the close and close at the highs of the day, or close to the highs of the day. And then there's a quick sell candle at, well, that's 4:30. Didn't quite make it to the highs of the day. It did after hours. Futures are flat after hours. Right now, down about a 1. They were up about a 2. Standard procedure. Foreign markets are opening right now, so you're going to see some volatility. So, saying all that, let's accept the fact that markets are going to be volatile. It's a fact of trading that we cannot run away from. It doesn't feel good when you wake up in the morning, you have a nice set of long setups, and the futures open down like 10 points. Like, what the heck, right? Well, what the heck is a fact of life and trading. So let's just accept it. Let's deal with it and have a solid day like we did today with buying reversal trades, some big movers that started running right off the bat, like Netflix. Told you guys to buy it last week. Amazon up 30 points. Apple up about up at one point up $1.50. Calls up 60-70%. We left Tesla alone today. It's going through its own little growing pains. That's going to bounce too, in my opinion. Microsoft kept going. Facebook just started running. Nvidia, strong finish. Qualcomm, been running since last week. Then I told you guys to buy it at 70, closed at 82 and change. Will go to about 85 from what it looks like, if not higher. And a bunch of swing trades. Kimberly Clark, first time I ever played it. The calls were up more than 300% from about 2 to $7.65. We bought them as suggested at around $1.60, $1.70. So you go figure. You buy something at $1.60, it goes to $7.65, closes the day at $6.50. We're still long the ones at 132 calls because we moved the strike up. Those were slightly lower for the day, but hey, you kept most of your profits and you bought some lottos. Just give yourself 48 hours, and you're probably going to get a nice double on those too, because the stock, as we'll see tonight, is on a major breakout. One of the best moves on Kimberly-Clark they were saying in 8 years or something. Again, a stock that we don't normally trade. Then we have Blackstone, new name, Blackstone Group, pure technical breakout. Pure technical breakout. We're slightly down for that for the day, but we are up since I alerted at around 50 cents or whatever. They went to about 79 cents. You can always trade those. There's a whole bunch of stuff going on. Okay, whole bunch of stuff going on, but selective. That's the whole point here. So let's just accept that fact. Now, we're going to go through a whole bunch of stock charts today. We don't want to spend too much time. We have other people who have joined us, our great member House. We have Mike. So you guys can catch up on the first part of the recording, when I put it up on YouTube. So first of all, a quick rundown of the market, and then we're going to go through a bunch of charts. So we are, before I forget, we're in the midst of earnings season right now, all right? So things are going to be rocky, but the overall trend in the market, as I keep on showing on the dailies and the weeklies, is still higher. That doesn't mean you're not going to have heartbreaks in the middle of the day when the markets pull back 50 points or even 100 points, but that's what we have to deal with. And in order to deal with that, you have to rely on these 15-minute charts and the 1-hour charts that I consistently put out there. Not like once every 3 hours, but once every half an hour, once every 15 minutes, a couple of times an hour, so you know where we are standing. So earnings season, in the midst of it, accounts can grow substantially during earnings. You can play with a small amount of money. You can buy a basket. You can choose 2 or 3. I always screen using my own methodology, the ones that I think are going to work. It's not just a technical thing. Earnings are always a gamble. We know that. 50-50 chance. But I use fundamental and technical justification and analysis to recommend the ones I think are going to go. And most of them do go. And some of them flop. And then they turn around and go. Like Netflix. Okay? So that's just the way it goes. So you have to, I'm not saying you never in life or in trading follow someone blindly, but you have to understand the power of experience and the power of technicals when it comes to things that I'm putting out there. That's my job as the content provider for Clueless A Trading subscription service. You all know that by now. So we have the other macro factors in the balance, most importantly, the US-China trade deal looking smooth. Looks like President Xi, Premier Xi in China, and President Trump are going to meet sometime in early May. They are talking. They are giving some concessions to each other, and that's a good sign. That's a good sign. Algos are going to basically flip you around like a rag doll in the middle of the day, but that is why you rely on these charts. I'm going to keep repeating that. All right? That's volatility. But these charts will save you from major heartbreak, and heartbreaks happen in 2 ways, as we all know. Heartbreaks happen when you're long and something like this happens. Heartbreaks also happen when you're long. Let's say you bought it here of these levels, then it slips a little bit further, and you let go of everything. And then you get a hammer reversal, and it goes berserk. Well, that's a bigger heartbreak, what we call in the business, in life, that the pain of regret is far worse than the pain of sacrifice. So if you sacrificed your mental pain or your psychological, emotional pain, and you did not dollar cost average, or you did not hold on, it hit those extreme levels, as I keep on showing, like this one's an extreme support level. That's why it's in a thick red, at around the 28.89 mark, and you let go of everything, well, the pain of letting go when the markets are sliding, you're seeing your options down 30-40%, even though you bought it at this support level, and you let go of everything here, and then you could have made 200% if you had dollar cost averaged a bit or held on, is far worse than mentally dealing with a 40 to 50% paper let down or loss when the algos take over. Algos know exactly where the retail guy is putting up their stops. Remember, it's a matrix, right? And the matrix are these supercomputers, these black boxes are running it at nanosecond speeds. They know where the cluster of the price chasing RET, retail emotional trader, is. We don't look at it that way. We look at the matrix as the matrix looks at itself. We try to do that, and we do it quite successfully. And that's the reason why these charts are in existence, created by Clueless 8 Trading. So the more you understand them, the less freaky you're going to be, or the less monkey on a hot tin roof you're going to be during your active trading during the day, or your swing trading during the week. I know I'm stating the obvious, but it is very emotionally very difficult for price chasing traders to deal with this type of volatility. So all I'm trying to do is help. So without going into it, these are self-explanatory. These are not some rocket science charts. This is the nature of the beast. This is your 15-minute chart. You can handle your SPY trades, or you bought like a tech stock and it's moving up $4 or $5. Where are you going to sell it? Well, you can use the SPYs as a background, the Qs as a background. Of course, you can use the actual stock chart as a background. When I'm day trading and overall on a fast mover like a Netflix or a Booking.com or an Amazon or a Facebook, I'm using the 15-minute, 1-hour charts. I am not using the 5-minute charts. I'm looking at it here and there, but to get in and out, I'm looking at the 15-minute to 1-hour chart. Again, it's not rocket science, basic trading fundamentals. So this is your 15-minute chart. It is very choppy. Nothing we can do about it, but I have pinpointed the exact levels. Remember, this line wasn't drawn after the fact. This was drawn last week and before, from the 15th. This is a head, and I showed that on a different way on one of my other charts in a very simplistic way. There's your double top. Here's your left shoulder. Here's your right shoulder. Guess what the market did? After the market closed, and this is where we closed at 4 o'clock, it zoomed up, hit the right shoulder, and now pulling back a little bit, roughly about a point or so after it moved up, and about a point from where we closed at 4 p.m. This is not rocket science, ladies and gentlemen. The more you get deep into the matrix and understand these charts, the better off a trader you will be. It's not going to take away the frustrating feeling of crazy volatility. This is structured volatility to make us crazy. Remember that. All right? So the algos know exactly when to drive a retail emotional trader crazy. And the people out there who do not trade off these Clueless 8 Trading charts, they are truly insane. So bottom line is there's a very strong structure here. You got a double top head. You got the right shoulder, left shoulder, right shoulder. Then you got major support here. This is what you call a trading range. This is your double bottom head right there. And I'm not going to even bother asking the question, because I'm going to ask the question and answer it myself. When the markets opened down 10 S&P points today and everything was down, futures were down about 150 points on the Dow, blah, blah, blah. Don't tell me you guys woke up and said, oh, yeah, the market's going to bounce. Okay? I looked at my charts. I started to see movement on multiple charts, candles forming, specifically on the quad algo HFT platform that I use and I share with you guys. And I recommend everybody use it. I started to see the big fat candle forming, and I said, looks like there is a high probability. We play a game of probabilities here, okay? That this market is going to hold that opening low and bounce from there. And I was dead right. This is not the first time it's happened. You know that. I'm not saying that to make myself feel good. I'm just saying it as a fact. And you all know that. So again, doesn't matter what happens. This is the way I train my mind. What happens at the open? We're going to reevaluate situation and we have to act accordingly. That's why it's so important to have some cash on the side. Doesn't matter what size account you have. Okay, so none of that BS excuse. Everything is in long positions. I don't even have $5 in the cash account. That's garbage. You cannot do that. You got to have some cash on that, or get out of it and use that money, which is allowed on a cash account, which is not a day trading account. You can use that money on something that, especially in options that you bought the day before. You just can't use the money and on something you buy the same day and sell. That money refreshes the next day. It's T+1. Okay, these are things you guys should know. So you can still use the money. If you're long something yesterday and you're up a little bit, or you want to move out of that position, move on something moving faster, like a Netflix, moving like a rocket ship, or Nvidia, then you need to just get out of that position, use that money, and move into that. People who want to learn more details about that, sign up for my ACS sessions. I share a lot of good stuff with you guys, but if I'm going to spend my weekend mornings and sometimes on weekend nights spending and coaching, well, you got to pay the coach a little bit for their time, more importantly, for for your own benefit. Okay, so this is where we are right now. This is your 15-minute. So we had the head and shoulder. We hit it there. We need to break out of that. Now, before we break out of that, the market will probably do this tomorrow morning, or even slip down to it and retest that 2,900 support level, which it constantly keeps on retesting. We slipped 2,900, then we hit that 2,889, another 10 points. This is when the damage occurs on individual stocks, when something falls below 2,900 on the E-minis or the S&P 500, you start to see a rapid deterioration in individual, especially large cap stocks, down $3, $4, $5, and tech stocks falling accordingly. So we want to hold at 2,900. And if we open down at 2,900 for whatever reason, that's 11 S&P points you're going to open down. It's not going to feel good, as the majority of our positions are long. But you have to, at that point, react accordingly and have a phenomenal day. You got to turn around adversity that comes your way in trading, we're talking about, and life too, but in trading, and just give it your best shot. Can't just fall back and say, oh my God, here we go again. Well, that's life. Here we go again. All right. I don't want to be here, you be your mommy or daddy or Tony Robinson. Tony Robbins, I called him Robinson, holy crap. Tony Robbins, and tell you what you need to do. But these charts are there to help you. That's it. Then you got let's move on. So we need to break this. We need to break out of this range here, this blue line that's around 29.15, and that will negate this head and shoulders, and it will shoot up to about that 29.23 level. And then who knows? It'll recycle down. I don't know, or maybe we break out of that. Maybe we break out of that. Okay, over 29.27, the market really breaks out, and that's when we hit that 29.40 mark on the S&P 500 that the market wants to go to. So that's where we are now. This is again the 15-minute. This is the Fibonacci retracement. Told you the 50 Fibonacci retracement. The 50 Fibonacci retracement from the lows on the 18th. What day was the 18th? 18th was last Thursday. Right there. That was last Thursday before the market opened. That's 4 a.m. in the morning. You can see the time. So this 50 fib acts as major support. No magic. Thank Mr. Fibonacci centuries ago for devising the Fibonacci numbers. read up on it. It's pretty fascinating. So basically, the 50 pip is important. As long as we hold above the 50 pip, we are basically good to go. If we go below the 50 pip, then we have levels that I've showed you guys repeatedly: 2889, 2895, and 2900. So the Fibonacci retracements are extremely useful. Doesn't matter if you're a swing trader or a day trade, or you're day trading a certain position. That it'll tell you where the next level of fib. For example, this one is the 100% fib. This is 78.6. You can see that it will hit that. It hit that level here. This is your Fibonacci extension at 2930. That's when all hell breaks loose on the upside. Can we get there? It's a good possibility. Looking at the daily charts, there's a good chance that we can get to 2930. It's not saying much. It's only 19 points from here. And that would bring us up to 19, like about 150 Dow points. We'll be right there. So Fibonacci retracement chart, very important, especially for people who are trading the SPYs, SPXs. Now let's take a look at the daily. So this is your daily SPY. I showed that earlier before. I zoomed in. This is the spider. Yeah, this is the SPY daily. I'm always very focused, very focused. Gotta bring this in now. What happened? See, my focus disappeared here. I was gonna put a little highlight there. Okay, we're gonna have to cut that out. So I am extremely focused on the candles, candle structure. So when this is, you can see here, this was one fat sell-off, algorithmic, manipulated, complete sell-off. Even though we were long here, you literally had 10 minutes to sell. And that was on the 17th. You all remember that. But then we stayed within this range. I highlighted this for all of you to see. Previous, this is the actual chart, but I kind of zoomed in. That's why I was just showing you what was going on. So I showed a pattern symmetry of previous corrections or retracements that have lasted. Each candle is a day, and then what has happened. And you can see there is no difference between these. This was sharper and deeper. This was lesser. This was back on the end of March. And this is right now at the beginning, middle of April. So key is that we are still in a consolidation. That's why I say, for people who don't quite understand the terms, this is a consolidation channel right there. 288.65, 291.52. Remember, these numbers for real traders mean either money in your pocket or no money in your pocket. So when you come, when you're really trading with real money and you're buying a couple of SPY calls or buying a put, or mostly we're buying calls here, and you don't give any, the only people who don't give any credence or shit about these numbers are the ones who actually are basically just not trading at all, or are trading but have no idea what they're doing, in which case they need to get help, and they should certainly direct message me, and I'll try to help them as much as possible. But I am certainly not going to change their diapers. So bottom line is that this range is important, and this was a very nice finish. Look at that. So if you are, as you're starting to, and no one should start to, so people should really dive in and learn immediately, that when you're looking at candle structure, this is very bullish. Not only because we're in a consolidation bullish channel on the daily, and this is what keeps you grounded, whether or not, I just don't make up stories and say, oh, the uptrend is intact, just because I want to feel good because I'm long, and make all of you feel good because you guys are buying the calls. I'm looking at this stuff here, and I'm making a clear-eyed determination and showing you the charts that go with it. I mean, what more could you guys expect? No other service does that. They don't always give you a justification as to why they're buying something. We're showing you in visual format, and your job is to understand that. Why we're saying it's a high probability it's going to do that. Why the uptrend is still intact. Why Google is going to go the way it's going to go and has been going correctly, as forecasted, as alerted. Why Amazon was up 30. Why Netflix would bounce. Why NVIDIA is destined to go to 192. Why Qualcomm will go to 85. There's a basis why we're saying it, not just saying it for the hell of it, okay? So don't waste your time by not, I think that's the best way I can put it. Don't waste your time by not focusing on these charts. So saying all that, this is nice. This is the long tail. This is where we are. Upper end of the range, again, 299.42. At that point, either we break out or we slap down. And we keep it. We could be doing this for the next 2 weeks, for all I know. And you can still make money. And then it breaks out or it breaks down. We shall see. There's your S&P. This is actual S&P daily. I'm sorry, hourly. And this was a weird bunch of candles, I'll tell you. You know, that was a complete algo dump right there on the 17th, right in the morning. Big algo dump. And now, but still within the, and those algo dumps hurt a lot of expiring options. We know that. And stocks for no reason because sliced up. Amazon down 17 and Apple will be down 2. But that's a pure algo dump for reasons that I have explained in my previous videos. It could be an economic reason. It could be a Boeing dropping and then before it reversing, all kinds of stuff. And I think that was the day that IBM croaked and put the market down, and Netflix was down too after going higher. So there you go. Not anymore. I'm making a new high soon. So this is still within, this is your consolidation channel right there. You can see that. This was the one that we played. It lasted a bunch of days. And here's something I want to mention to all of you who are here and who are listening. People get impatient. Adults are the most impatient human beings that I know. Just because the market is consolidating within this band, to get like, oh my God, yeah, this is crazy, you know, there's nothing going on. There's a lot going on. The market's giving you time. Think about it like that. If these structures are in place, as you can clearly see, this is your consolidation channel. And listen to carefully what I'm going to say, all right? But it's doing this. The market's giving you time to buy something at a cheaper price. Not really cheap is these type of levels, but it's giving you a moderate, reasonable price to buy before it does this. Now, what does the RET, retail emotional traders, and many of you are in that basket, I believe, do? They're always waiting for the frigging breakout. By the time the breakout happens, we are selling. So why not utilize this time where the market for a couple of days, it's consolidating within this consolidation channel, just the way it did here, and then broke out. So if you were set up in this range, not necessarily at the bottom, well, that would be great because it's obvious that you should be buying around these levels. But if you were buying around here and you were buying around here, then that's when you get that beautiful feeling of shooting fish in a barrel and that feeling of 150, 200, 300% type of ROI. You do not get that feeling, ladies and gentlemen, by chasing the market on a breakout. I hate markets when are up 200 points and I'm not positioned right on the long side. This ain't grandpa's market anymore. So please slap yourself into understanding, and I've been saying this for a bunch of years now, I'm going to keep on saying this now, that you cannot be a buyer on these big breakouts, these consolidation bull flag breakouts. You need to be a buyer within the bull flag. You need to be a buyer within the bull flag. Because remember, these are all bull flags. These are all bull flags. There. It's going to do this. So you want to be a buyer within this level. Why does the market always have to be up 150 points? Let's not be childish about this, seriously. I mean, it's really time to grow up. We all want the markets to be up 150 points every single day because we're on the long side. Well, like they say in New York, dude, it doesn't work like that. So wake the F up. You want to be a buyer, patient buyer within these consolidation channels and enjoy the fruits of your patience when it does this. And if it does this, you're going to say, okay, now it's giving me a slightly cheaper price. So you want to buy it here because this market wants to go higher. I've been saying this for months now. Okay, remember, the best buying prices you're going to get are within these consolidation channels and bull flags. I hope I made it clear. Seriously. All right. So this is your hourly chart. This is your daily. Showed it to you. So we saw that. This is your QQQ. Absolutely fantastic. Again, the QQQ is about to break out again. You think all the tech companies are going to have crappy numbers? I don't think so. And more importantly, they're all running. So you should be trading them now. When Apple was sitting at 180, most people didn't want to even touch it. 190, they didn't want to touch it. At 200, they're all getting excited. We're buying it all the way from 180, 185, 190, 200. It's going to go to 205. I showed on my long-term charts. It's probably going to go to 210. So this is your weekly chart. And the weekly chart is basically, again, is creating a bull flag. Now, if you get a big, ugly red candle, get the heck out of Dodge. Sell your positions. Save cash and buy again at the level, which is a retest level of 28.67. Can it happen? It sure can happen. Do you want an exact date and time when it's going to happen? Yeah, I'm going to tell you. Why don't you give me $10,000 or $1,000 instead of the 70 or 90 bucks that you guys pay me? Some people pay 60, the older members. My charts are telling you what's going to happen. So there is no technical deterioration whatsoever. This is a rising wedge. It is consolidating a little bit, and then it wants to hit this level. Now, when you think most of you, well, I hope not, get super excited at 27.48, I hope not, because the market's going to blow past that for a split couple of hours, if not a day, if you're lucky, or for a couple of minutes, and bang, it's going to pull back. Now, the pullback's not going to go all the way here. The pullback is going to be a typical rising wedge pullback like that galloping horse formation. There. Okay? There's really no magic here. So overall, the broader picture, and now we're going to look at the, before we get into stocks, here's your S&P 500. This is what your S&P 500 looks like in real life. You had 3 days of a red candle. You had 18th of Friday. You had, Thursday. And then you had this today. So none of it is looking really dramatically crappy. Pullbacks here and there, yes. But technical primary uptrend, higher. Want to look at the same thing on the SPYs? Not that you guys haven't seen that. You can see we are climbing up the wedge. Upper end of the wedge is 292. This is a daily chart. If you look at a weekly chart, look at the internals. I'm not even going about explaining it. I mean, it's just visually, what does it look like? It's weakening? Come on, guys. So yeah, we could have a quick flash crash. We have them almost every other day, 100 points, 150 points. But look at the primary trend, higher. Can things change overnight? Yes, it can. If we don't get a China deal, this market's going to drop 1,000, 2,000 points. President Trump is not going to let that happen. Neither will China let that happen. So, aside from that, there are other shocks here and there, but the market's absorbed all of them. The Brexit crap, everything. You haven't even hear about Brexit anymore, right? So, so overall picture is fine. Now, let's talk stocks. Are we done with the markets? Everyone got what I'm trying to say? Yes, no, maybe?
Yes.
Okay,
Yes.
sounds good. Okay. Look at this. This is the total breakout, and no one talks about it. You ever heard anyone on TNBC? Oh, the QQQ just had a massive breakout. Look at this. This is a daily QQQ breakout. Why is the Qs going higher? Because the techs are moving higher, and the biotechs and the and a bunch of Nasdaq 100 companies in the healthcare sector moved higher. Forgot to mention, but some of you did buy it. United Healthcare. The stock is up, what, $14 from the time that I told you guys to buy it, and nobody would touch it out there. United Healthcare, because Bernie Sanders, Mr. Socialist Supreme, set up Medicare for all, which sounds great. It's always good to have healthcare. Totally supportive of that, but you can't have Medicare for all just for the hell of it. So these guys collapsed. So I told you guys to buy it around 208, 209, 210. Stock closing into 228. How many days? 48 hours since last Thursday. Sorry, since last Wednesday. The calls from $3 to $11. They move it a little bit slower. I expected them to move faster. United Healthcare. Go look at the chart. I told you about Humana. That went berserk. Another one that moves with it is Athena Healthcare. Anthem. Anthem Incorporated. ANTM. So despite the carnage on biotech overall, because of drug price control, which they get hit from both sides. Both the Republican side, Trump goes nuts on them sometimes, and then the Bernie Sanders and the socialists go nuts on them, and it's everyone's like hating the drug companies. Like, okay, great. They should just stop operations. They should not do any research, like whatever, like see you later. Go buy drugs from Mexico and Russia, right? Okay, good luck. So, so there you go. Nothing more to say. It's a NASDAQ's moving. It's a breakout. It's a full breakout. Right there. Is it going to go to 200 right away? No. I'm playing it, we're getting close to the money. We're buying the 189s. Those ones, somebody says, well, I don't have any money to trade. Okay, well, good. Why don't you ask your grandma? And if grandma's not around, ask grandpa or rob your own bank. Because the QQQs, it doesn't take much, okay? They were at 38 cents at the open. They went to 80 cents. That's 100% plus intraday. The Qs. And I showcased it many, many times. On Friday, they closed at 66 cents. So if you just bought a little bit more at around 38 cents, 39 cents, 40 cents, 41 cents, you would have basically gotten some really nice fat 60, 70% returns just by dollar cost averaging. Again, it's not rocket science. The Qs and the SPYs are very affordable and they're great trades because they're moving with the market. So that's it. Now, I don't want to sit here. There's a lot of stocks. So throw out one. I know Trina's going to say Google. I already showed Google. Google was it's fantastic looking chart. It's the first level of contact from today is 1268. It'll probably open up there tomorrow, for all I know. The trouble starts above the 268 mark because that's when it really sold off big back in July of last year. It's a very good looking chart, technically speaking. Is it way overbought? No, it's getting overbought. Amazon. I mean, these charts are so good looking, it's not even funny. Like, why everyone just sits around like scared all the time. Volatility scares everybody. It scares me too. I hate volatility. I take advantage of it, but I hate it. And I'm sure that applies to all of you too. But volatility allows us, and this is how we got to program our mind, allows us to buy cheaper prices at times when we are not at times when we don't want to chase something up 15, 20 bucks. Why not buy it down 15, 20 bucks, down 15, 20 bucks, as long as it's within a structured range? That's far more smarter and feels better than chasing something up 15 bucks, which, by the way, can go up another $10. It happens, but I hate that. So this is your downtrend line on Amazon, very clean to see. 1891, it breaks above that. There is this level where Amazon, remember, it's all pattern symmetry. Doesn't matter what Amazon's doing, it's what the charts are saying. So this is what happened back last October. So is it possible that it regains back that 2050 mark? Very much so. Is it possible that it pulls back 30, 40 points before it does that? Absolutely. But what I don't like about Amazon is the frigging premiums are so stuffed and inflated. They are so expensive that I have to buy, I don't want to buy $40 a call. Well, you can buy one and they say, okay, that's it, $40 a call, you're a baller, you paid $4,000 for a contract. They don't give you as much meat on the bones than if you had calls like Google. Google's calls are affordable and they move. The 1260s that I was showing at around $3-4, they closed at $6.50. You got to double on that money intraday. They went to $1.90 at the beginning, at the low of the day, at the opening. They closed at $3.60 on Friday. I'm sorry, on Thursday. So those are affordable, and they are almost in the money. They're 1260s, and Google closed at 1254. But in the case of Amazon, the premiums are so stuffed most of the times for a reason. They know the stock's going to jump up $200, maybe. But there are other ways to play this tech moves. You can just buy the cues. Just buy the cues. So that's a good looking chart. Qualcomm. See you later. These are the type of charts you don't normally see. This is your daily. So let's do the simple back of the napkin calculation. All right? Know that by now. 77.5. That's a very wide range. And 47.5. Let's call it 50. And 77.5. So that's 27. Let's call it $27. Add 27 to 77 plus 27 to be exact, 104. That measures up to $104. Can this stock go to 100? Sure can. Because there's only be two major suppliers to Apple's 5G revolution. Samsung, which has always been a supplier, and now a made in America Qualcomm. The 5G revolution is on. This is pretty major. Now let's take a look at it on a hourly basis. It's just, you can play it up to about 87. What it can, here's your, you put up the hour chart. It's easy to read. Here's a 50 moving average on the 1 hour chart at 79. If it breaks that, the stock's going to go to 74. But if it stays within this range and these lines are uptrending, the stock is going to drift up to about 87. Those calls are cheap. I like these calls, which are $1.50 that go to $3. Told you guys to buy the 70 calls. God knows where they're now. You're going to cry for people who didn't buy it. Then I said, buy the 80, buy the 82s. Originally, I told you guys to buy the 70 calls when the news came out and the stock was still up. And then the next day, where did it go? It went to almost 77, $80. They were up 500%. 500% on Friday. I'm sorry, Thursday. Told you guys to buy it here when the stock was closing on Tuesday. Around this level. And then went to 82. That was actually 600%, or 5 to 600%. It's something sick. $1.47 calls. I did explain that on the Wednesday thing, I think. Went to $11. Go figure. All right? So next time you want to give yourself a really big excuse as to why you're screwing up on your trades, please just remind yourself on what Qualcomm did and can do more. Okay, I'll take a look at Roku. So there you got Qualcomm, Netflix. God, seriously, guys, heavy volatility. Netflix, right? Stock hits 375 pre-market. It hits 326 post-market after earnings. Opens up here. You literally have 5 minutes to sell. And then bang, it pulls back. Then it goes higher. We played the calls. They were up, I don't know. I think they were up more than 200%. Then they pull it back. It's like sick volatility. And then they just run it. And now it's going to hit a roadblock at 380. It breaks 380. You got to look at the daily to see what's going on. Holy moly. There's a gap fill here, which I constantly kept on showing. That gap fill is 387 to 392. But it's got some major resistance to take out at 380. Can it take it out? Yeah, I think so. With that kind of candle, sure. And this gap is what it wants to fill, one way or the other. And that gap is a heck of a lot more points from here, 388 to 392. It's not rocket science. It's about mental discipline and tactical discipline of holding a position. You can buy it 2 weeks out. In between, you need to cost average it a little bit, but you have to respect the charts. This, ladies and gentlemen, as I kept on saying, is a monster cup consolidation channel. I told you all to buy the stock when it hit the bottom of the channel before earnings. Now it's on the top of the channel and it's going to bust a move. This is a monster cup and handle. And these things, when they resolve themselves, and this has been going on since the beginning of the year. This handle's been developing since the beginning of the year in a range of 40 points. 40 points. So if it breaks out, it's going to go right up here. Okay? All right. Roku. It's a real tough read on this chart, to be honest with you. But real company, real deal, lots of hedge funds shorting it, blasting it here and there. We have traded it pretty successfully, haven't traded it lately. So there's a broad way of looking at it. This made a pretty substantial move and got back to its previous high, almost. Now it's creating a large consolidation channel. Personally, from a risk-reward standpoint, this is a buy because it's at the bottom of the consolidation channel and it can bump up to about 62, 64. What I don't like on the daily, which you can see two house, is both the 34 and the 50 moving average is sliding. I'm sorry, the 34 and the 20 moving average, the 50 is fine, still climbing, are both trending down. So that means there's some real downward pressure for whatever reason, but you can trade the levels. The 50-day moving average is 62. So you take one stage at a time. You said, okay, it's going to kiss the 50-day moving average. Let's see what happens. If it really wants to go down, it's going to dramatically move down from here. But you can play the 4 points right here. If it blasts a move above that and over the 34, the stock is back in fashion and it's going to go up to 70 in the low 70s again. Earnings might do it. Earnings might do it. This is good. Internally, the stows are shaping up. This is extremely good. Look what happened last time it did that. We're in it, if you remember. Not at 25 or 30. We're mostly around here. But this is definitely a plus. Let's look at the MACD. I like it. This looks like there's a minor positive divergence in play where the bars are shrinking and this is starting to curl. Once it starts to curl higher, and this the full stows start to really cross over. It just started to cross over. Then you're going to see a blast up into the 65 range at $7 from here. It's quite a bit for the stock. And of course, at that point, there's a gap here at around 68. So yeah, it's a buy. It's a buy. What becomes a complete short of this stock is if it breaks below 55. If it breaks below 50, sorry, 1 second. If the stock breaks below, get this, clean up the charts. Okay, if it breaks below the 200-day moving average, which is not that far away at 53, they'll blast the stock down into the 44 range. So it will be a great short too if it breaks below the 52, 53 range, and you can see that on your own screens. That's a 200-day moving average. But otherwise, it's got it. I believe it's a high probability bounce at least towards the 50-day moving average. It pulled back here this dramatically is because it moved so fast, so furious away from the moving averages. It had to mean reversion, and it came straight back towards the 34-day moving average. Went up, retested the moving average, went up, retested the 34-day moving average, couldn't hold it, so they blasted it down, took it down below the 50, but this is where we are. So I'm sure the earnings are going to be a pivotal test. Stock did get extremely overbought. So that's where we are. Questions, anyone, please, because I'm going to start wrapping up. Questions, please. No one has any questions. That's fine with me. I wanted to show NVIDIA. NVIDIA has not even completed the upper end of the gap, and that is at 196. This is a very technical chart. That's the upper end of the first gap, 196. The upper gap is 227. Can it do it over earnings? Maybe. I like stocks that are coming off the bottom, real companies like NVIDIA. So the fact that it's doing this, to me, is exciting. I am not chasing it here all the way here. I am moving into in the first gap, and then here's the second gap. So best case scenario, the blowout numbers, the stock's going to close the second gap at 224. Can it go up to 292? What the heck do I know? What does the circular rings on the thing? The circular rings is basically a Fibonacci, what do you call it? Those are things I don't draw with my hand. I just basically supply it. They are Fibonacci circles. So I just call them the flight map. That's what it means. Mike asks, what do the circular rings on a BA charts mean? Remember, I don't have circular rings here. They are basically concentric circles. They generally show you, and if you look at the chart carefully, especially they were structured on primarily the daily chart, you will see that it hits each of those levels. Those are just, like I said, those are just what are they called? Fibonacci. Hold on 1 second. I don't use them that much. The other circles are simply the gap fills. This is called, I'm trying to find the exact term. Yeah, it's basically the Fibonacci circles. I want to be corrected on that. Hold on 1 second. Okay, they're called Fibonacci arcs. So you can read the whole definition of that, just the way we do Fibonacci levels in horizontal lines. Those are called Fibonacci arcs. There is another indicator known as the Fibonacci fan, but those are Fibonacci arcs. I drew that because it was such an extreme drop initially from the 445 to the 360 level. I put it up there, and I started to notice that they actually moved between each of those circular levels, the arc levels, and that's why I used it. AMD, okay. Jody, Mike, I hope that answered your question, sir. So the Fibonacci arcs. AMD is, this is your daily. It's a good looking chart. It's a good looking chart. Let's take a look at the weekly. AMD, the calls are so cheap, anyone can play them. 29.40, yeah. There's nothing wrong with this chart. Volume has totally dried up on the weekly. You can see that after the 2 weeks of selling. Right now it's moving higher. So I would say on a psychological basis, if it crosses over 30, then the next level of major supply comes in around 31.91. So nothing really that exciting per se. This is your hourly chart, but it is definitely AMD is AMD. So chip stock. I like Micron more because they're in much more varied sectors. I mean industries, and Micron is I think a better player. So let's look at the daily. So that's your daily chart, Jody. So I would say again, it moves in a range of $1 or $2. There's no exact major catalyst, but it's a chip play. MU, on the other hand, to me is exciting because it reminds me of NVIDIA. Okay, and a China trade deal is MU is one of the biggest beneficiaries because they manufacture a lot of their secondary components in China. So this stock, buying those calls at 40, 50 cents, to me makes sense because to me, this is what it's looking like right now. It is within this uptrend channel. You guys can see that. That's important. And it's doing this. So it is creating it's a cup and handle. An ascending type of, it's a cup and handle like this. 1 second, watch. First of all, it's within these two channels. So that's big. So on any major piece of positive news on AMD, Micron, the stock can go to 45 to 47.5. And you know what those little calls do. They go up 200-300% fast. So what it's doing here I'm using this as the top neckline for the cup right here, which is the 47.5 mark. This is what it's doing. It is a slightly upper sloping handle. So I like this. And MU is liked a lot by some of the big shots. And they don't, I'm not saying they don't like AMD, but Micron is has more exposure to different sectors of the chip industry, and I like it. Okay, they generally normally the stock moves about $1.50 on a good day. Was flat today, so it's a good time to buy the stock, in my opinion. What's a bad time to buy this? And we have a 50, 34, 50 crossover right here. What's a bad time is if it's breaking below 41, we don't want to chase it. At that point, we'll wait till 40. We'll wait till 39. So far, so good. Any others, please? We have it's 9:06, so we have a couple more minutes. Let's look at Apple. While you guys are thinking what to look at. I mean, I've been talking about this for a while. Now, keep in mind, the actual logistics of Apple trading is that let's say you bought it 2 days ago. You got to play the levels because what happens with Apple, they run it up. Technically, there's nothing wrong on the daily charts, as you can see. This is actually a weekly chart. That's where the white line comes from, right there. Okay, so it's breaking above that. Everything's looking good, but intraday, boom, they'll run it up $1.10, then they'll let it slip down. So all of a sudden, your calls that you bought at 80 cents, they were up at $1.60, $2. If you're not managing your trades, they'll be down to $1.50, and you'll be like, oh man, I could have made more. Or if you bought it during the day, which can be done with Apple, it'll slide down. And so Apple, they say, is the most black box, high frequency trading control stock in the market because there's so many shares. It's a big cap stock, right? But if you want to play it from a swing trade, Apple, as you can clearly see here, the reason I drew this line is your head. This is your left shoulder. This is your right shoulder. That's why I said 210 is your right shoulder. So if it breaks above that, Apple's going to basically go past 220. But if it doesn't, then it's going to pull back into the 190 range. So that's it. You know what I'm saying? Any other questions? But technically, damn good looking picture. As long as, 210. But from a trading logistic, so you have a bunch of apples, not like one or two. Let's say you have 10 or 20. You will get that big move up. You want to take the profits down, slip in with a few, with a couple, and if it's starting to ramp up, they always do this every day. They move Apple up to the highs, move because it drags the market higher, right? Because they use Apple as a tool to get the market higher, and then they just let it slip there. Nothing happens on the daily, but intraday, this is what happens, and you give back a lot of your gains. There, see, they ran it up to 205, which I said it was going to go to. Nothing really changed in the picture, but then they ran it down to 204, and that 94-cent pullback just seeped out a whole bunch of premium from those options that you might have bought at the open when it was running. So you do have to manage the trade. But swing trade-wise, no damage detected on Apple. This is pretty significant for the market too. I have been saying that there was a gap here right there. It basically there, right? So now it's taken up that gap. There is another gap here, a small one. That's at 206.32. Then there is a fat gap here at 213, 217. So whenever Apple's earnings are, it might get there. It might fill that gap. And that is again a head and shoulder. There's your head. There's your left shoulder. Here's your right shoulder. There's your gap. Right there. Okay. BA. BA, it's tough to show you on this one. You got to follow my quad charts. BA, in my opinion, is the daily. It's just going to be one of those. It's not a swing trade yet. I think it's a swing trade. As long as you close your eyes during the day, what happens? BA technically on a daily basis is the internals are fine. You see the crossover. Let me explain this. Internals are fine. Crossover. The MACD is kind of coming off the bottom, right? Positive divergence, so that's fine. What's happening here is you got a major downtrend line right there at 379. There was some sort of big article in the New York Times that they fudged the quality control on the 787s, blah, blah, blah. I like the fact that Boeing refuted that comment, said there's a lot of shoddy journalism. It almost seems, this is a hedge fund target right now, right? So whatever bad news they want to put it up there. In the meantime, 737 MAX are the certifications going through, and that plane's gonna fly. Okay, period. Now, hopefully nothing terrible happens, because if that happens, BA is going to be down like another 10, 20 bucks, like in a heartbeat. We don't want that to happen, obviously. So technically speaking, this downtrend line has to be negated. The 34-day moving average is 382. If it manages to get above 382, 383, the stock is at 395. From a swing perspective, like I said, you got to believe in the company. I believe in the management. I think they're quality management. The products are quality products, finest in the world. They're basically going through this period. So technically speaking, as long as the stock holds 370, and that's why it's a swing trade, you want to buy time, but you're going to wake up one morning and the stock is going to be at 15 bucks. It's happened before, because there'll be some positive news saying that Air Canada or somebody decided not to cancel or resume flights of the 737. Not necessarily resume flight, that we'll hear first from the FAA, but you're going to have some airlines saying, oh, we're going to buy 20 more. We're comfortable with what they're telling us. But before that, the FAA has to fully certify the plane is flyable, which it certainly is. There are more than 100 flights that have been flown with the new software, with top Boeing engineers in it, and everything's fine. But technically speaking, this is the level you want to buy it, between 375 and 366 or 370, and you want to wait for this move up to 395. That's when you make the big bucks. But to me, there's nothing damaging given the amount of negative publicity that the stock has gotten. So I trade primarily off my Thinkorswim, the quad, TC2000 chart that I show you guys, and the quad chart that I show you. It's a range trade at this point, with the possibility that you just wake up one morning and boom, the stock's going to go, because it's taken a lot of hits. And even today, you could have day traded it. The 385 calls went from 364 to 518, closed the day at 395. At one point, BA was only down $1.90, if you remember. So that's it. All right, guys. Thank you for attending. This was very refreshing for me too, to go through all this stuff. Let's, like I said, there's no magic formula how to handle this type of market. It's a volatile market. The level of fear and the American Association of Individual Investors had the highest neutral rating. What does being neutral about the market mean? What do you think it means, House? When somebody says, "Oh, I'm neutral about the market," what are they exactly doing with their money at that point? Jody, I'm asking this a general question because this will answer a major component of the market as to why I think the market is, contrarian, why still has room to go. They had the highest amount of neutral reading, the American Association of Individual Investors, in a while. What does neutral mean in life? Come on, guys, no one can answer. Trina, you guys all sleeping? Lots of lightning in cash. Yeah, so when somebody, Mike is right. When somebody's in cash, it means they're scared of the market. So neutral really means, I've always said this, when somebody says I'm neutral about something, there's always neutral is not a bias, okay? You're basically biased towards the bearish side. That's why you're in cash and doing nothing. So but the general reflex over time, the general reflex on past performance has been the market has edged higher. So that's basically what's going on right now. From a behavioral standpoint, people are very scared. They are. It doesn't matter how good the news is and stuff, they're scared. And why? It's because this volatility is nuts. Yet, people who are focused here are clueless at trading. They know what the charts look like, so they can stick with the trades. On that note, God bless you all. Hope you had a nice weekend, restful weekend with your families, and let's connect tomorrow. Let's just make it happen. Thank you. And don't forget to play some of the earnings. Otherwise, look at Whirlpool up 11. You're going to sell those, just like Kimberly Clark. Those calls were up more than 300+%. And the Whirlpool calls, which were around $4, I think, they'll probably open up around 10, 11. You got to play these, so you grow your account. Remember, there is no certainty in trading and in life. It's only probabilities. Play the probabilities. And that's it. God bless you all. Good night.